Alright, let's start off with the discussion for FRM Level 1 curriculum. So before we start off, a very basic idea. So we'll be covering what's there in the syllabus in very much detail. What's the scope of FRM curriculum, the syllabus, the passing rates, the passing criteria, how are you supposed to prepare, where are you supposed to be practicing from, where are you supposed to be studying from, how much hours it's going to take for you to prepare, in what order you're going to be studying. So a lot of things. So we'll be covering almost everything that you need to know about in order to start off with the FRM curriculum. We'll be discussing right now. So first of all, when you're looking at FRM, we need to understand the basic idea behind the curriculum. So financial risk management is a global designation. The institute is in the USA, but the exams take place all across the world. So you can register online for the exam on their website, and you can give the exam anywhere. You can give one level in India, the second level in US or UK or Singapore, anywhere you feel like. So it's a global designation. The designation is in finance, but the specialization in finance area of risk management. So FRM is going to be a finance specialization, but it is going to be specializing in the risk management area. So before I start off with it, I want to explain the exam pattern, how it happens. So there are two levels to it. We call it part 1 and part 2. Part 1 is going to be 100 MCQ paper, and this one is going to be 80 MCQ paper. There is no negative marking. There are 4 options in the paper. It is a 4-hour paper. The exam takes place every third Saturday of November and May. So you can give the exams and every third Saturday of May and November. That's a fixed date on which the exam is going to take place. So let's say around 20th of May and 20th of November is the time when you can take both the levels over here. Level 1 takes place 8 o'clock to 12 o'clock, that is a 4-hour paper, and level 2 will be 2 o'clock to 6 o'clock, that's another 4-hour paper. It is possible to give both the levels together, however not very advisable because the syllabus is quite considerable. So you can give part 1 and part 2 together in the same day, but then if you clear part 1, then only part 2 gets evaluated. So if someone passes part 1, then he will get the result of part 2. If he passes both the levels, you have cleared FRM in one shot. But if you've passed, let's say if you've not cleared part 1, your result for part 2 will not be given. So if you do not pass part 1, part 2 ka result also you will not get. So it doesn't matter whether you pass or fail because you will never know what happened to your part 2 result. So syllabus is quite bulky. So I would not suggest anybody to go for part 1 and part 2 together, especially if someone is already working. If someone is not working and has a lot of time and has a good base of finance already, and they think they can tackle part 1 and part 2 together, so I think I would not discourage someone on that ground, because I myself had given both the parts together and cleared it. So I would not be in a position to discourage anybody. It's very much possible, definitely it's possible, but that's the syllabus is bulky. So when you're working, and along with that, if you want to give part 1 and part 2 together, I would not advise the same. Right. So anyways, we'll come to that discussion later. There are 4 options for every MCQ. There is no negative marking. 100 MCQ, 80 MCQ. Third Saturday of May and November, both the levels are taken. So you can give it in May and November, November and May, or both in May or both in November, as you feel like. It's a 4-hour paper, so you get 240 minutes to do 100 questions. So you get a decent amount of time, but still time crunch is there. Let me come to the subjects. When you're looking at part 1, we have 4 subjects over here. One is the foundations of risk management. Next is quantitative methods. Next is financial markets and products. And the next one is valuation methodologies. I'll come to each subject. Just give me 5 minutes. When you're looking at part 2, we have 4, technically 5 subjects. So we need to understand the whole curriculum first. So before you take a call as to whether I want to do an FRM or not do an FRM, we need to understand the curriculum, the job, the prospect and the scope very well. When you're looking at the syllabus of FRM, the part 1 syllabus is going to be focusing on the basics of finance. So this is going to be talking about absolutely finance. Second level is going to be talking about absolutely in terms of risk management, and it is going to be assuming that you understand the finance part very well. So all the finance that you need to learn is going to be in part 1, financial risk management, and in the second level we'll be specializing with the risk part. So when you're looking at the part 1 curriculum, you have about 69 to 70 readings or so. There are a few readings that is kind of changed every year. So we'll look into that a little later. But other than that, if you see, you have about 69, 70 readings over here. When you're looking at the foundations, it's going to be a relatively thinner book. Now, there is a weightage also defined over here. These two subjects have 20% weightage. This one has 30% and 30% weightage over here. So out of 100 questions, you'll get 20 questions from the foundations, you'll get 20 questions from quants, 30 and 30 from financial markets and products, and 30 questions from valuation methodologies. When you're looking at part 2, it's going to be a straightforward 25%, 25%, 25%, and this one is going to be a breakup of 15% and 10%. Alright, so basics for part 1 is going to be covering the basics of finance. When you look at the first subject, there will be a lot of theory chapters as well, wherein we are discussing the concepts behind risk management. There are a couple of readings, so I will start with the discussion of the syllabus altogether. So there will be a few readings on the disasters that have already happened. Like 2007, it was a disaster. It was a recession, not technically a disaster, but it was a recessionary phase. Lehman Brothers collapsed. The US government was facing a very, very major situation over there. So there are a lot of readings on that, a portfolio part. So I'll come to each of the readings in particular. The second one is going to be with respect to mathematics, that is the statistics part of it. The third one is going to be with respect to all the financial products that's there in the market. And the fourth one with respect to their valuation and calculations of risk. When you're looking at the first part, it will be absolutely with respect to finance. I will come to it. I will discuss every single reading one after the other. When you're looking at part 2 is not going to be discussing with respect to finance. It is going to be into a discussion absolutely onto the risk management part of it. When you're looking at the first subject, I want to actually get done with this. So when you're looking at part 2, market risk. Now say for example, if interest rate goes up or down, of course your fixed income portfolio is going to get affected. Your fixed income securities, your bonds, debentures, their values will be affected. What if the exchange rate goes up or down? So of course your foreign exchange rate is going to go up or down. It is going to be affecting your share prices. Say for example TCS. TCS is exporting services outside. So if the dollar rate is going to be changing, the TCS, the value of TCS company share is going to get affected. If a pound rate is affected, Brexit happened, the pound rate is affected. That moment Tata Motors share price will be affected because Jaguar is owned by Tata Motors and Jaguar is valued in terms of pounds. So all those effects are going to be there. So we need to study those effects as to how it is going to cause a kind of a valuation change in your portfolio, and that is what we study in market risk. So market risk is going to be how the changes in the values, how the changes in the market factors are going to be how the changes in the market factors are going to be affecting your valuations and all, and how do you manage those, how do you measure those risks and all. A very advanced level of risk management will be taken care of in the first reading, the fixed income securities and the other ones. When you're looking at the credit risk, now when you're looking at credit risk, say for example, in a very, very plain simple manner, I lent out some money to someone and he defaulted on that payment. That is credit risk. That when I'm loaning out a certain sum of money to someone, he is not going to be able to pay off that amount to me. That is known as credit risk. So credit risk is going to deal with that part. It's going to be quite extensive because I know it's going to be very difficult for me to tell you in an hour about everything that you're going to study over here. But then if you understand the securitized products and all, so there are a lot of financially engineered products that were there. So when you're looking at the US crisis, so why did that happen? There were a lot of instruments that these people were using. So credit risk is going to cater to that. The housing market collapsed in the US. There was a major impact because of that. So how is that related to the credit risk? People took a lot of home loans and then they defaulted on those home loans to the banks. And ultimately Lehman Brothers being one of the largest investment banks in the world and US, it defaulted. It ultimately was not able to make payments. So we study all of that in credit risk. There would be quite a few models and all we'll be studying in how to measure the credit risk. How do we understand how much credit risk the bank is entailing? And credit risk is not always just when you are giving loans. Like suppose I do a contract with him. What if he backs out on a contract? It need not necessarily be that I'm giving him a loan. But what if we both have a contract with each other and he backs out of the contract? I'll be ultimately suffering a lot of losses. So how do you manage all those kind of situations? That is what we study in the credit risk part. Then when we move on to the operational risk. So operational risk is a full-fledged subject. We have one reading of operational risk in this book. There is only one chapter. We call it reading over here. So operational risk is a full-fledged subject over here. There will be a lot of liquidity risk over here as well. When you're looking at operational risk, For example, suppose how much capital should a bank maintain? Now think about it. How much capital should a bank maintain in its balance sheet? How much equity should the bank have? Now, when I go to a bank, I never expect that the bank is ever going to tell me that we people have made a lot of losses and now I cannot give you your money back. When you deposit your money in the bank, your bank can never say no to you when you want to withdraw money. You have already seen during the period of demonetization, when you were told that you can swipe and use whatever money you want in bank transfers and you can withdraw a limited amount of cash for some time, what kind of a havoc was created absolutely all over the country. So just imagine when a Greece-like country tells you that the bank is bankrupt, the bank does not have your money anymore, we people have made losses, how would a country like India react in that kind of situation? Just imagine. The bank is never going to be in a position, you can never allow the bank to be in a position that the bank is going to lose all your money. You can't just print currency and give it to the bank. It will create hyperinflation and your currency will get absolutely useless. That is what is happening in countries like Zimbabwe or something. Venezuela is losing absolutely the currency of Venezuela has absolutely lost its value. The whole country defaults. Risk management has become very important. So how much equity to be maintained by the bank? The more the risk you take, the more equity should be taken. Because say for example, if your asset is equal to 100, your liability is equal to 60. Your equity is equal to 40. If your asset value falls until your asset value touches 60, your debt holders are safe, because whenever the company goes bankrupt, first of all, you will pay off all those people who have taken loans, who have deposited their money in the bank, who all have the liabilities with the bank. So till there is a 40% reduction in the asset amount, nobody is going to touch your money. You're pretty safe. What if I make this as 20 and this one as 80? Now the moment there is a drop of 20% in the value of the assets, your equity is going to get, your debt is going to get harmed, your bank might go bankrupt. So what is a legitimate amount of equity that you need to maintain? Now imagine every single penny that we people all keep in the banks is actually a liability from the bank's point of view. So a bank's debt equity ratio and the normal any XYZ manufacturing company's debt equity ratio is not going to be the same. It's going to be very, very different. It's possible that some non-commerce background people might not be understanding exactly these terms. Don't worry. Once we start off with the curriculum, it is going to be absolutely from scratch. You will have no issues. I'm just trying to explain what you're going to study over here. So how much capital to maintain? How do you measure that? How do you measure the riskiness of the banks? So when you're looking at the operational risk curriculum in particular and a part of credit risk, it is going to be a little banking centric. So FRM is going to be applicable more into the financial institutions, banks and energy companies, because over there the risk management becomes very, very important. Over there the risk management part becomes very, very important. Operational risk also deals with quite a few readings on liquidity. Now what do you understand by liquidity? Now suppose I have a real estate of, let's say I have a house worth 50 lakh rupees. You will say it is not liquid because you are not able to sell it in the market whenever you want. I can sell it in the market whenever I want if I charge 40 lakh rupees. Suppose the house is worth 50 lakh rupees and I charge 40 lakh rupees, immediately someone or the other will turn up and buy the house because they're getting it at a discounted price. They will take advantage of my financial condition because I need money right now. I cannot sell the real estate of 50 lakh rupees at 50 lakh rupees in a short duration of time. That is liquidity risk. You cannot sell the asset at its fair price. Selling the asset is possible, but selling the asset at its fair price is not possible in a very, very short span of time. That is what liquidity risk talks about. So how do the banks need to be maintaining liquidity? How do we measure liquidity? All of that. Now say for example, ICICI Bank system gets hacked, or their Flipkart's online services get blocked, like the website is not working for a few hours. That is, that is operational risk. So in the operations of business, the risk that you entail, that is operational risk. Basel norm is going to be a major chunk. How you evaluate as to how much equity is to be kept is decided based on Basel norms. So just the way you have like an IFRS, which governs how accounting standards should be maintained globally. Similarly, we have something called Basel norms. So that is basically, earlier we had Basel 1, then we had Basel 2, and now Basel 3 is under implementation. So it's like a uniform set of rules and regulations which globally all the banks are following. Now RBI has mandated that in India by 2019, Basel 3 norms should be in place, because it takes a few years to implement those rules and regulations. So it's going to take few years. So 2019 is a deadline, March 2019 as far as I remember. March 2019, the central bank, the RBI has mandated that all the banks should be complying with all the rules of Basel. So all the Basel rules are mentioned in operational risk. It's a bulky subject. People get very scared, not scared of the subject, get a little irritated because it becomes very theoretical in places. So operational risk, a lot of content is there. If you want FRM L2, there is another video on YouTube you can check wherein I have discussed every single topic inside the syllabus detail, because right now I'm here to discuss this part, FRM L1. I'm giving you an idea of L2 because ultimately you need to understand what degree you're opting for. Right. Investment risk is hedge funds, and when you make investments in the markets, when you're purchasing, making investments in the market, how do you measure the performance of a manager? How do you evaluate which manager is good, which manager is bad? How do you evaluate what kind of risk you've taken? All those calculations comes under the investment risk portion. So investment risk is more numerical and very interesting. These two you'll find it very interesting. Operational risk, 60-70% you'll find it interesting, 30-40% you'll get a little irritated. But then again, whenever you're opting for any degree, you'll never have 100% chapters of your interest. So you have to understand that. And there'll be small ones, you know, the theory ones are very, very small ones. So you'll not have a problem as such. Current issues is become very interesting. This is one subject that keeps on changing every year. So current issues is what is happening in the current market. Like a year back, when I used to teach current issues, it used to be covering, let's say, American, the recession that happened during 2007-8, and it was focused on that. From the last year, 2017 onwards, the curriculum of current issues is looking at negative interest rate in Japan. It is looking at a little bit of, let's say, bitcoins is there. So it is very, very contemporary. So whatever the current issues, whatever is happening in the current market, so earlier it was, let's say, 2007-8 crisis. Now we have bitcoins, algorithmic trading, high frequency trading. So whatever is there, very contemporary topic in the market. So this syllabus, the syllabus for this subject keeps changing very, very quickly. But in order to understand these specifics of risk management, you need to have a good finance base. And that is exactly what we are here to build in FRM Level 1, Part 1 curriculum. So the Part 1 is going to be focusing absolutely on your basics of finance. Like operational risk 1 reading I will introduce over here, the institute has introduced over here. Let's say when you're talking about current issues, there is one reading in foundations wherein there are 8 to 10 examples. Like a Ride Irish Bank failed. You have the Chase Manhattan Bank suffered losses. So you know all those 7, 8, 10 examples in history, because it's very important to learn from history. Learn a long-term capital management company's failure. So when you have those 10, 15 examples that this bank failed, why did it fail? What was the impact of failure? What we could have done to prevent the failure? What should we do now in future so that this does not repeat? So you know, studying all those 10, 12 case studies in this foundations reading, in this foundation subject. So now let's discuss all the subjects, all the 4 subjects, one after the other in a lot of details. Everybody's understanding what we're looking at. So one is the basics of finance and the other one is going to be specializing in absolutely risk management domain. So that is your FRM Part 1, Part 2 curriculum. So let me discuss the Part 1 curriculum and then I'll tell you exact applicability in what kind of job profiles we look at the FRM Part 1 being very useful. So when I'm looking at the first reading, when I'm looking at the first book, Foundations of Risk Management, we're looking at first reading is going to discuss about the different kinds of risk. So credit risk is different, default risk, spread risk, there are very different kinds of risk. So a lot of risk terminology. What is risk? Risk is not loss. If I know that this is going to go down, I will sell it pehle se, I'll sell it beforehand. So risk is not loss, risk is uncertainty. I don't know whether it's gonna go up or it's gonna go down. If the raw material prices will go down, I don't want to stock right now. I will buy the raw material inventory later. If the raw material prices is going to go up, let me buy a lot of inventory right now so that my margins are not affected. The problem is not loss. The problem is uncertainty. If you know that this is going to happen, you can insure yourself against that. So it's easier that way. So the problem is not losses, it is your risk. And then you will say that let's not take the risk, then don't do business, don't get returns. If you don't take risk, you will not get returns. So when you're looking at risk management, it does not mean you don't want to take risk or you want to remove risk. Then you buy insurance for everything, you will never make a profit in business. Risk management is not taking risk. It's not avoiding risk. It's not insuring risk. It's understanding that these are the risks I'm taking. These risks are costlier. Let me hedge those. Let me insure them. And these risks I want to take because this is my business. If ONGC does not take the risk of oil prices going up or down, then why would someone put their money in ONGC? Because if you take risk, you will get return. If you don't take risk, nobody is giving you return for free. So risk management is recognizing that, okay, these are the risks I'm taking. These are the risks I don't want to take. It is costly to buy insurance for this risk. It is not costly to buy insurance. When I'm saying insurance, please don't think from a life insurance or a health insurance point of view. I'm just using the term insurance to explain you the meaning, but we have financial products using which we try to safeguard those losses, using which we try to insure against those. We'll come to that. Then we come to a lot of corporate governance and how we know we have a CEO, CFO. We also need someone called a CRO, Chief Risk Officer. So that is also required, especially when you're looking at banking, financial institutions and energy companies and all. Because the risk is manifold. Oil prices, we saw them touching $140 a barrel and then going down to $20 a barrel. Just imagine the riskiness that these energy companies were entailing. Huge amount of risk. $140 to $20. Just imagine what happens to the country, like Arab countries and all. Those who have to export oil to maintain their CAD and current account deficits and all of that. They have to sell oil in order to buy goods and all from the market. Just imagine what happens to that kind of a country if the oil prices would have continued to be at $20. So risk management becomes very important in energy kind of companies and all financial institutions and banking organizations. Banking, we can see a very direct application, that is Basel. So there's a lot of demand because of that. Anyways, so then what is enterprise risk management? Nowadays, we don't have everybody is not managing their own risk. There is a trading organization. There are hundreds of traders. So we have a central risk management system because there's a lot of cost savings that can be done if you are doing the risk management function in a central basis. Risk management by banks. So we'll focus a little bit on how the banks are going to be doing the risk management. Then is a financial disaster. The chapter I was discussing about that you'll have 10, 12, 15 case studies or so wherein you have studied that okay, these banks and these companies have failed in the past because of so and so reason. So that is your financial disasters. Then there are two readings, credit crisis of 2007 and getting up to speed with the 2007-8 crisis. So there are two readings. So earlier in the previous version of syllabus, current issues used to cover the 2007-8 crisis. Now it is covering more contemporary topics like Bitcoin, algorithmic trading, high frequency trading and all. And the 2007-8 has been consolidated into two small readings in level 1 and it is there in the first book. So why did the 2007 crisis happen? How did the housing bubble happen? So all those we study. Then there will be three readings together. Then there will be three readings together on portfolio. So now in order to define portfolio, when you're talking about portfolio, you're talking about let's say 2-3 stocks together. Suppose stock A, stock B together is my portfolio, all that I own together. Now say if stock A increases, stock B also increases. Suppose I have only 2 stocks in my portfolio, stock A and stock B. If stock A goes up, stock B goes up, and if stock A goes down, stock B goes down. So basically stock A and B are moving together in the same direction. So in totality, my portfolio is also going to be moving this way. Let's take another situation. In the second situation, my stock A goes up, stock B goes down. And if my stock A goes up, stock B goes up, stock A goes down. So basically the stocks are moving in opposite direction. My portfolio will be moving in this way because one of them is going to increase, one of them is going to decrease. They are going to balance out the effect of each other and they are going to be moving in a kind of a mid-range. Right? Everyone following? So now when you're looking at this kind of movement, which one is a more riskier option for you? Option 1 or option 2? Which portfolio is more risky? The first portfolio or the second one? First one. Why did you say so? Because the first portfolio, your standard deviation is high, your volatility or movement is whether it could be too high, it could be too low. You're very, very uncomfortable with that. In the second one, it is moving in a very narrow range. There is more certainty. It's not the profit or the loss. It's about the certainty that it's going to be in a very, very narrow range. You know exactly in what narrow area will your stock returns be. So now do you understand that I've measured the covariance of the stock? If two variables move in the same direction, covariance is positive. And if two stocks move in opposite directions, your covariance is negative. And based on that, you need to calculate the risk of the portfolio, the return of the portfolio. And there are a lot of formulas and all which we need to go through. So you will have a full-fledged 3-4 readings on your portfolio section. It's a very interesting topic. So there will be 3 or 4, it will be mathematical. So book 1 is kind of more of theoretical, book 2, 3 and 4 is mathematical. So book 1, its major chunk is going to be less numerical. When I'm saying theoretical, I'm saying non-numerical. Everything is going to be very conceptual. You are going to get MCQs in the paper. So you don't have an option of writing a definition or 4 points or 5 points. So the questions are going to be absolutely analytical and something based on hardcore understanding of yours, right? So you cannot mess around with that. So what we do over here is, in these 3 readings in the portfolio, it's very, very numerical. Then how do you compare? Let's say a manager A's performance with respect to manager B. So different ratios, different formulas and all to evaluate manager performances and all. How to measure the portfolio's risk, return, etc. So there are about 4 readings, and there are new theories and all. So we'll get to the portfolios part. There are a couple of more theoretical readings like data aggregation. So it's very irritating, 3-4 page chapters. So out of, like, let's say 70 chapters, you will find 5-7 chapters which you're finding it a little irritating, or everybody's got their own choice. And you will not ever, in any course, you will not have 100 chapters which all are absolutely of your interest. So this one, 3-4 pages, is a very theoretical, easy, very easy chapter. Because see, all the organizations are now driven by data. If your data collection is inaccurate or if it's incomplete, you're going to be making incorrect decision making on the basis of that data. So there is one small reading on data. And the last one, an important reading, is on GARP Code of Conduct. Now your GARP Code of Conduct, FRM is a designation given by the Global Association of Risk Professionals. So that is your GARP. So when you're registering for your FRM exams will be registered on the GARP website. So when you're looking at the GARP Code of Conduct, it's very important, that say for example, you're doing risk management for a client. It's very important that you're not trying to manipulate your client's money and making him bear losses for your own mistakes and all. So it's very important in our profession that a certain level of ethics and code of conduct is maintained. Just the way lawyers, doctors, teachers, they're all supposed to maintain a certain code, certain ethics, because they're in a profession, not in a business. Similarly, when you're looking at risk managers and financial advisors and all, because people are trusting with you with their money, their whole financial wealth, you're supposed to be taking care of that. You're understanding? Because you're playing with someone's financial future. That is not a joke. So we need to maintain certain rules and regulations. We need to maintain certain codes. So that is your GARP Code of Conduct. So that completes your first book, Foundations. Your questions are going to be jumbled up. I've already mentioned that. You'll not have serial order 20 questions, then next 30. It's going to be jumbled up. It makes it a little difficult. When you're looking at the second one, that is your quants. So when you're looking at the quants curriculum, so there are quite a few readings over here. In the quant section, primarily you have about 3 or 4 sections. The first section is going to be a little bit of annuity, time value of money. You will have a little bit of probability. You will have some statistics, basics and all. So when you're looking at annuity, now suppose at time 0, if you have $100, you invest it for 4 years. Let's say interest rate is 10%. You will say you have 100 into 1.10 to the power 4. It's a simple compound interest formula. Because 100 becomes 1.1 times, that becomes again 1.1 times, and that becomes 1.1 times because you're paying interest on the accumulated amount. That means 100 becomes 146.41. That is the answer. 1 becomes 1.4641. Can I not say that? Unitary method. If I want 1 over here, how much do I deposit over here? 1 by 1.4641. Simple unitary method. If I want 1 over here, I need to deposit how much today? 1 divided by 1.4641. That is basically when you take 100 to this one into 1.10 to the power 4, that is compounding. When I take 1, the present value of 1, dividing it by 1.1 to the power 4, that is discounting. So most of the formulas we are going to be proving it over here in the class. 70 to 80% of the formulas we'll prove in the class. You'll have to have a very thorough understanding of everything. If you're going to mug up, don't do FRM. If you're planning to mug up, this is not for you. And in fact, any degree that you're looking at, CFA, be it CA, be it FRM, be it any degree, if you're mugging up, it's not going to serve the purpose. So you have to have a very thorough understanding of everything. That's why I prefer to say, prove at least 70 to 80% of the formulas in class. Then when you're looking at, so all the money related calculations, you'll have to use annuity and all those things. So time value of money is technically the right term. So time value of money is what we need to study. All the annuity, EMIs, all those calculations is what we'll look at over here. Then when you're looking at probability. Now probability, say for example, in 11 and 12, you might have done something called the Bayes theorem. Now I don't remember the formula of Bayes theorem and I will not teach you the formula of Bayes theorem. But I can always prove it within 2 minutes, the formula of Bayes theorem. So the point is I will teach you to do the sums in Bayes theorem without using the formula. So you will never be using the Bayes theorem formula in the class. Joint probability, conditional probability, itna variety, there's so much of variety over there. You will not be learning, you'll hardly be learning 1 or 2 or 3 formulas maximum. 2 formulas, not even 3. So we need to improve our understanding. So whatever was not been, maybe not explained to that level in 11 and 12, you need to do that over here. Another question that I get is, will I be able to manage if I did not have mathematics in class 11 and 12? So even if you did not have maths in 11 and 12, it's not going to be a problem because I'll be teaching everything from scratch. Of course, it might be needed that you have to put in a little extra effort, because maybe what the other student is understanding in the class would be 20%, 30% faster than you. So you'll have to put in that little extra effort. So that is that. And then your statistics part, mean, median, mode, standard deviation. Because when you want to analyze data, you need to look at the statistical attributes of the data. What is the average? How much of standard deviation, portfolio movement we check, whether they move in the same direction, covariance positive, or opposite direction, covariance negative. So we need to look into all those factors as well. So annuity, probability, statistics, etc. is going to be the basic part of your stats. The second portion is going to deal with linear regression. Now say for example, I want to find out the relationship between, let's say, SBI and interest rate. So SBI's share price is equal to something plus something into interest rate. We can form an equation, y is equal to b0 plus b1x. We want to form an equation between y and x, where y is SBI, the prices depend on, let's say, interest rates in the market. So how do you form that equation? How do you construct that equation? What if I want to construct an equation wherein SBI's price is equal to b0 plus b1 into interest rate plus b2 into exchange rate plus b3 into GDP rate plus b4 into foreign exchange rate? So there could be a lot of different factors. Multiple regression. So there are 4 readings in between that is going to talk about linear regression, that is forming equations. Right? Everybody? Then there will be a few readings, there will be a few additional readings, modeling, forecasting, seasonality. So when say for example the auto car sales, when you're creating an equation for car company, the car sales are always higher in the third quarter because they give a lot of discount during October, November, December month. Because the car will get 1 year older the moment it is next year. So the tax certificate and all those issues are there. I'll not get into that part right now. We'll do it when we do that. That bit. So seasonality, if there is anything that is happening in a cyclical manner. So how do you do those forecasting and all? That is one section which will have about 3-4 very small readings, very small readings. And then there are a couple of readings which I don't know if I'll be able to talk about. Volatility. It is about forecasting, volatility and correlation. So you can look at the past share prices and you can measure what was their volatility, but what will be their volatility in the future? Forecasting volatility, forecasting correlations. So that part is over here. That chapter is going to be very important because you'll have to apply it in one of the places over here. So we'll discuss this part and I'll tell you exactly what is more important, less important, all those things we'll take care of. So you don't have to worry about it. But quants is your second curriculum. Now when people question me about the standard of questions and the standard of curriculum, the standard of curriculum is good. And the standard of questions is quite good. So the questions are difficult in the exam. So level of questions is not going to be easy. So the level of questions, the difficulty level, when people compare it to a CFA, say for example, the level of difficulty of FRM part 1 will be more difficult than CFA part 1, quite a bit notches above. So our understanding, the thoroughness, the conceptually, we have to be very good. And also I'll tell you from where and how and exactly how much to practice. So we'll be able to tackle the exam. We have to be able to tackle the exam. So that is your quants for you. Is everybody understanding, getting a hang of the curriculum? Because if you're investing so much of money and effort and time in something, we should at least know what we are looking at. It should be something that you want to. Then we're looking at the curriculum of financial markets. Just give me a second. Now, when you're looking at the financial markets and valuation methodologies, these two subjects, they will have a little bit of overlapping kind of topics. It will be very difficult for me to explain it to you in 5 minutes exactly what the subject holds for you. But say suppose, I'll take an example. Let's say I'm scared that if I'm dead, who will take care of my family? I buy life insurance. I'm scared that if I fall ill, who's going to pay the hospital bills because they're very expensive? So I take a health insurance. When I'm scared that the dollar rates might go up or down, an exporter is scared of that. Say for example, the exchange rate right now is 65 rupees per dollar. So the exporter sells goods, he gets $1 lakh later. Now he is thinking that he'll be able to convert that $1 lakh as 1 lakh into 65 rupees per dollar and receive 65 lakh rupees for it. If the exchange rate becomes 63 rupees per dollar, he's very scared because he will then get 63 lakh rupees only for the same $1 lakh. So he will experience a loss of 2 lakh rupees immediately on the goods that he's selling. So how will he manage his risk? There is no life insurance or health insurance for him. What if I'm a farmer and I'm scared that the wheat prices will fall? I'm scared the wheat prices might fall. I'll be very scared because the whole year I'm working hard to grow the crops, and suddenly at the time of sale, at the time of harvesting, what if the property prices, the wheat prices, the crops prices falls down? How do I manage those risks? So for those kind of risks, and that's exactly what financial risk management, we are here to manage risk, that is done by using something called derivatives. So there are 4 kinds of derivatives: forwards, futures, options and swaps. It'll be very difficult for me to explain derivatives to you in a very short time. Let me attempt. Say for example, I get into a transaction with someone. Let's say the farmer got into a transaction with some person, let's say ITC. That farmer gets into a contract that I will sell you wheat after 3 months and you give me 20 rupees per kg, suppose. So now if the market rates increases beyond 20 or decreases below 20, the farmer does not have to worry about, because after 3 months, he has already made a contract that I'll give you so many kgs of wheat and you give me 20 rupees per kg prices. That is a derivative contract, that is a forward contract. Don't try to understand too much, because I need 2-3 hours to explain derivatives. So just to introduce the topic. So I'm just trying to give you an idea of what it looks like. So don't try to understand too much into it. Just get a very brief overview kind of stuff. So that's a forward contract. Why? Because you enter into a contract today, but the execution of the contract is going to be happening at a future forward date. That is why we call it a forward contract. Now say for example, if I buy an insurance in some manner, that if the wheat prices, suppose a farmer says that I'll buy wheat from you, I mean if the wheat prices go down, you are supposed to pay me the damages, and if the wheat price goes up, I'll not give you anything. I will sell it in the market at a higher price. It is like very much like an insurance contract. Farmer is going to suffer losses if the wheat prices are going down. So I'll buy an insurance on that. That is called an option. So we'll discuss all those. So there are forwards, futures, options and swaps. These are the derivative transactions. Amazingly interesting. I mean, one of the most interesting portions of studying finance. Portfolios, derivatives, fixed income. So it's brilliant. So derivatives is what is used in order to execute all the risk management work. So derivatives is going to be covered very extensively. There are about 6 readings or so, 5 to 6 readings on forwards and futures in this book itself. On options, you will have about 4 readings over here and about 3 readings over here. So there are about 7 readings on options. There is 1 reading on swaps over here. So forwards and futures, you'll have about 6-7 readings, aram se. Easily 6-7 readings. On options, you'll have 4 plus 3 readings or so, 7 readings. And there is 1 reading on swap. So derivatives is going to be a major chunk when you're looking at your last 2 books. Then there is another portion like your interest rates. So as interest rate moves up and down, your fixed income securities will be affected. Now say suppose you did an FD today, a fixed deposit. You did an FD today when the market rate was 7% for 10 years. After 2 years, if the interest rate increases to 8.5%, you'll regret that you blocked your money for the next 10 years and you will get only 7% of interest rate. Whereas had you waited for 2 years, you would have been able to invest the money at 8% rate in the market. Had you invested for 2 years, you would have been able to reinvest the same amount of money for 8 years at a higher rate today. So you'll regret that. So the valuation of securities, how the interest rates change, how the value of the bonds, that is debentures or the fixed income securities or the FD you're talking about, how will that change? We look into the fixed income curriculum. How do you forecast if today's interest rate of 1 year interest rate and 2 year interest rate and 4 year interest rate is this much? So what do you think will be the interest rate 2 years or 3 years from now? So how do you forecast interest rates and all? So when you're looking at interest rates and calculations and the bonds and all, so it is going to be, there is 1 reading, 2 readings over here, and there are about 4-5 readings over here. So this one is primarily derivatives and little bit of options here, and this one has a huge chunk on the fixed income section over here. So these 2 subjects kind of go a little bit parallelly when I start off, because if I do options, I'll do both the books together. I'll not do one book and then the next book. I cannot do it that way. Is everybody following? So these are your derivative products. So book 3, I think I have covered almost everything. Alright, along with that, in book 3, we have a reading, the theoretical reading on corporate bonds, different kinds of bonds over here. And there are certain bonds whose valuation is based on mortgages, houses. So mortgage bonds is important and a big chapter actually. And it will be very important for you to understand that in context of 2007-8 crisis in US, because the housing market collapsed and US crisis was very much based on that. I mean, a very important factor of the US crisis that happened in 2007-8 was based on the housing market collapse. So if you guys want to get an idea, you can watch the asset securitization video which I have on YouTube. So it's around a 40-50 minute video. You'll get an idea. It'll be very interesting for you to understand that. That will anyways be a part of your curriculum. That is a part of your curriculum. So when you're looking at that, so the housing market, so corporate bond and mortgage-backed securities, there are two theoretical readings over here. Corporate bond is theoretical, mortgage-backed security is normal, and the rest of the practical interest rate part is over here. So there are about 3-4 readings over here. There's one interest rate chapter also over here. So there are 3 readings on fixed income over here and 4-5 over here. So 7-8 readings on fixed income, 6 readings or so on futures forwards, and 7-8 readings on options in both the books combined. Along with that, there are 3 theoretical readings over here. Now, because if you see, the globalization has become to such an extent, the scale of operations by these banks and large institutions and all has become so huge that, you know, doing the derivative tradings and all, the derivatives in which they deal, they want to have a common body that is called a central counterparty. You will not understand that. There are 3 theoretical readings. So when these multinational banks and all do a dealing with each other, they kind of form a common group through which they are going to do all this dealing. That is central counterparty. So we have a few readings, 3-4 readings over here, and those 3 readings are going to be very much detailed over here in your level 2 curriculum. So level 1 is building base of finance, and level 2 will take into risk management specialization, right? So that completes your book 3. So futures forward 6 chapters, half the options content, a couple of theory readings and a couple of readings on finance, the interest rate part, and a 3-4 reading on the central counterparty part, and a full introduction of what is derivatives, swaps and all. So that is there in your 3rd book. When you're looking at the 4th book over here, the last book that we moved to, so we already have the options portion that we already discussed, 3-4 readings over here, 5-6 readings on the fixed income part we've already discussed. Along with that, there is something called the value at risk. It has got about 4 readings or so, and it is very, very important from the exam point of view. So I'll give you a list of important chapters, and all those things we'll do, you don't have to worry. But value at risk is an exceptionally important part when you're looking at the exam. How do you measure risk? The very primitive or the very basic measure of risk is your standard deviation. The next most common risk measure is your value at risk. And when you're looking at risk management, of course, we need to look at a more advanced level of measuring risk. So standard deviation is a very preliminary or a very basic measure of measuring risk. Value at risk is going to be is going to be a relatively much more advanced measure of measuring risk. Also expected shortfall in a couple of things. So those 4 readings, now you need the basis of derivatives done if you want to do the value at risk. So order of study, in which order you are supposed to study, in which order we'll do the classes, I'll give it to you. So you don't have to worry about it. You cannot do it in whatever way you feel like. You're supposed to be following an order. And I have thought about it, you know, alternating a little bit of theory practical. Keeping a little retention ratio should be higher for the chapters. So keeping 20,000 factors in mind, I've actually sat down and designed the whole order of study, so you'll get that. So you'll do it exactly in that manner. And the chapters are interrelated, so you cannot do it the way you feel like. There are a few theory other chapters. So value at risk methodologies has got VAR few chapters, options, income, and there are a few residual chapters. One is like a rating agencies. So external and internal ratings. You would see your bonds are rated as AA, AAA, BB, BBB and all. So how do the ratings are provided? Operational risk and introductory chapter, which is a full-fledged subject in level 2. That is over here. Then country risk, because if you're investing in another country, like if you're investing in an emerging country, emerging markets, like if you go and invest in Brazil or something, of course there'll be an amount of risk that you'll be taking when you invest over there. It's a developing market, so country risk and all, and stress testing is going to be very important. Stress testing is going to be used in order to calculate how much equity the bank needs to maintain. So the basics, the theoretical part of stress testing, you'll be doing it in the book 4. So that is your entire curriculum. There'll be about 3 very small easy chapters on stress testing. So this is your entire curriculum. So just give me a second and think about whether you're liking the curriculum or not, but that is what FRM covers. So the basics of finance, and then we move into the specialization into every single avenue of risk. Right? Alright, so now I'll move on to all the questions. So I'll clarify almost everything, and if you have still any questions after that, you can ask. So one, FRM is a course on finance, but it is specializing in the risk management area. Next, the syllabus we've discussed, the exam pattern, 100 MCQ, 80 MCQs, 2 levels, takes place every third Saturday of May and November each. You can give both the levels together, but your part 2 gets evaluated only if part 1 is clear. There is no negative marking. There are 4 options to each question. The questions are not in serial order, they are jumbled up, so they will not be subject wise. The eligibility requirement, there is no eligibility requirement as such online, so that is not an issue. Even if you're undergraduate right now, you can start off with the FRM curriculum. The registration deadline, generally your first deadline is 31st of January for the May exam and 31st of July for the November exam. And your registrations open on the 1st of that month. So 1st to 31st January is where you can register for the May exam. If you register after 31st of January, you'll have to spend an extra amount. Similarly, if you register after 31st of July, you'll have to spend an extra amount. When you're looking at the amount of registration, you have to pay $300 as your registration fee and $350 as your registration fee. No, that is 350, 350, 700 and 400. Your 400 is your registration fee, I believe, and $350 is going to be your exam fees. So you'll just check. It's, I think, $1,000. It's $1,100 if I'm not wrong. So $400 is your exam registration fee. That's a one-time thing. Every time you give the exam, you have to pay around $350 again and again. So if you don't clear the exam in the first attempt, you have to again appear for the exam. You have to again pay $350. So if you're looking at that, $350 plus $300 or $400 registration, and then again level 2 $350, so $1,100 will be your total cost, somewhere around 80,000 rupees, 70,000, 75,000 rupees. Along with that, your classes and all taken together, everything I believe, and the books and the calculator and everything, it should cost you somewhere around 1.1 lakh rupees, the whole of the FRM exam. I think that also I'm saying on a very higher side. 1.1 lakh rupees would be the maximum amount that you would need in order to take your FRM exams, provided you're clearing the exam in the first attempt. That brings me to the next question, that is your passing rates. Your pass rates are somewhere close to 40%. So it's somewhere between 35 and 45% generally. Level 2 is a relatively higher rate, but then try and understand that people don't take these exams lightly because you're paying a lot of money over here. So when in Indian exams you pay 1,000, 2,000 rupees and give an exam, at times half the population might be unprepared and just takes the exam for the sake of it. Right, but in FRM curriculum, people don't do that. So people are going to be serious, they are studying, they've put in that amount of money, so you're competing with people who are studying. So don't be overconfident with respect to the pass rates. The passing criteria. Now, institute does not tell you exactly your passing criteria that you get this much marks and therefore you will pass. The results are given for every subject, you are given a quartile. Quartile tells you that you are in the top 25% performing people, that's the first quartile. Are you in the second 25? So you are in the 50 to 75%. So it's quartile and not quarters, as in it's not like between 75 and 100 marks. So if 100 people gave the exam, are you in the top 25, first quartile, next 25, second quartile, next 25, third quartile, and the bottom 25 people, fourth quartile? There are students who might have received the third quartile in a subject and have passed, and there could be students who received two third quartiles and they've passed, and there could be a student receiving only one third quartile and not passed, because that will depend on if you are in the third quartile, are you at the 49th or the 50th position, or are you at the 25th or 26th position. So within the quartile where you are. So the institute does not tell you exactly what is the passing rate, but what we need to do is we need to be in the top 35-40% performing people, because that's the pass rate, and we need to have a decent score on an average in every subject. So you cannot mess around with any subject, you cannot just leave one subject altogether aside. So it's like you need to do on an average well in all the subjects and 35% in the top of all the people. Generally what we do is 70% correct answers should get you through. That is the kind of thumb rule we have, that on an average 70% right answers is going to get you through. In order to register for the exam and for the exam day, you need either of the two identifications. One is a driving license and the second one is a passport. So even if you don't have a passport, you can do the exam, but you need either of the two. And since you have time till 31st of January or 31st of July to register for the exams, it's advisable that you get it made ASAP. In case your passport is going to expire, please get it renewed either before the exam deadline so that you enter the new passport number, or you register with the old passport, which should be valid right now, and then get it renewed immediately so that it is not expired on the exam date. Because whatever you will be using, whatever identity proof you will be using in order to register for the exam, that will have to be produced on the exam date. I've seen students, you know, they've on the exam date they're finding out that their passport is with the embassy because they had planned a travel. So be very careful with those things. So the registration process is going to be very simple. You can just go to the GARP's website, create your ID password, login ID and password, and put in the details, and pay the fees using only a credit card. Debit card is not allowed, so only a credit card will work. So you use the credit card, make the fees. A few times I've encountered students who don't have that kind of extra balance on the credit card. So what you can do in that case is, suppose I have a balance of only 50,000 and I have to make a payment of, let's say, 70,000. What I'll do is I'll pay 40,000 rupees to the credit card before paying the institute fees. So that way my balance becomes 70,000, 80,000. In most of the credit cards, at least the ones I use, I've seen this working. And then you can make the payment after that. Or also, if you have to borrow someone's credit card, normally the problem with borrowing credit card is people don't want you to use theirs is because of the tax problem. But then what if you give them a 70,000 check, use the credit card, and once the credit card bill is 72,340, you give them the 2,340 amount also in check, then it will not be a problem. Basically, if anybody is using the credit card on your behalf, you need to make them the payment exactly in the form of check. In that case, nobody will have an issue. So you can convince, in case you have to borrow the credit card, you can do that. Next question, I've already told you, even if your maths was not there in 11-12, or if your maths was not good, it's fine. You can still manage. You'll have to just put in a little extra effort. We over here are going to be covering every single concept, every single topic from scratch. Now, derivatives, fixed income, and all these things are not something that people have studied in class 11 and 12. So even those who are from a non-commerce background, you don't need to worry. Finance is not a commerce subject. Finance is a different stream altogether. So it's a new subject, it's a new curriculum, and there are new subjects over here when you're looking at finance. So non-commerce people don't need to worry, because these guys might understand asset and liability better. But then you people might have an advantage in case of quants, the non-commerce people. So commerce people or non-commerce people, you don't have to worry about it, because everybody will have their own advantages, strengths and all, and you'll have to put in a little extra effort wherever anything is going wrong. But other than that, you don't need any prior reading or prior anything in order to do FRM. So that will not be an issue. Now coming to the scope with respect to job prospects and all that. So when you're looking at energy companies, when these countries are also trying to manage the oil prices going up and down, when you're looking at the Basel implementations by the central banks. Now when you're looking at the kind of scale of operations that is happening, every trader is trying to work with China. They are exporting, importing from China and different countries and all. So the exchange rate management has become very important. Every the people opening a shop in 100 square feet are doing business worth of millions of dollars just because they have an online presence. So when you're looking at the management, when you're looking at the risk management of it, the scale of operations is so high that it is going to be very, very much required. But on a very serious and an honest note, if you're looking at a traditional manufacturing or some kind of business you have, FRM will not apply on that. It will not give you that much of value addition or benefit. When you're looking at financial institutions, when you're looking at banking organizations, when I'm talking about financial institutions, stock trading, etc., all the financial institutions, loan giving, hiring, leasing, purchasing, all those kind of companies, all the financial institutions, banks and energy companies will be demanding FRM cleared people. So it would not FRM part 1, part 2, whatever, FRM curriculum, they will be demanding this kind of job role. It will not be very, very applicable for business. So let me be very honest about those things. Now a lot of people also comment on what kind of salary they will get if they are in India or abroad. Of course, whether you're looking at a BCom or an MBA or a CFA or an FRM, whatever it be, the salary is going to be obviously higher abroad because the cost of living, the standard of living is higher. So, saying that online I saw that there was $40,000 package and now I'm not getting so much. So don't comment on all that. And also try to understand the whole global economy. There are all the educational institutes try to sell everything that they have in order to, whatever be it, I don't want to get into that discussion, but try to understand that the economy, even the global economy is not very good. Have a realistic discussion. Even when I'm traveling outside abroad and out of India, I interact with all my students everywhere. I do make it a point. I do meet up every single, I do try to meet up the students when I'm going traveling abroad as well. So the markets are not very good. So try to have a little realistic picture. And then it becomes all the more important to be studying. Because since the demand-supply mismatch is there, we need to be all the more standing out of the crowd and actually being more employable and, because if you want to climb the ladder, you have to do that extra. Because you have to understand the demographics of your country. The population is very high. And globally, the economy is not doing very well. It's getting better. India is expected to do much, much, much better. I mean, at least I'm very hopeful and positive about our country. But then you have to understand that because I don't want you to have that kind of disappointment. So be a little realistic when you start off. And at the same time, you have to work very hard. You have to study, because if you don't, then you'll be nowhere. I'm not saying that in like nobody, if you're not educated, you can't do anything. But college dropouts like Bill Gates or Steve Jobs or Mark Zuckerberg, there are only 5 out of a million. So don't try to extrapolate that those 5 people did so good without studying, so I will also do good. The other 99.9995 million people did not do it better that way. So we have to push ourselves. And especially for working students, I'll tell you, working people, it is going to be very difficult for you. You are going to be anyways getting busier. Your job is not going to get easier anytime in future. So you have to do it now. So don't defer it. Stop deferring it. I've got good number of students in the age bracket 30, 40, 45, 50 because they want to shift profiles or do better or climb up or, you know, do something extra, and you need to learn. How can you ask your company to raise the salary when you are not raising your earning capability? You're not earning extra for the company. Why will the company pay you extra? So working people, I understand, but you have to make compromises. You have to put in that extra effort after working hours and all, and you have to do that. I also work 7 days. I also still study. I'm still studying, not just for my classes. I am studying. So you need to do that. You need to upgrade. You need to scale up with your work. So that is more or less about the curriculum part of it. Then syllabus I've already discussed, how to prepare in the material and all that you're supposed to use. Now when you're looking at the GARP material, I have not seen people ordering GARP Institute's material because it is a little too huge and too extensive. So nobody uses the material and it is very expensive to buy. Even if you leave it out aside the expense part, there are some students I've seen, they start off with the institute material, but eventually after 4-5 readings or, you know, after a month, they'll understand that they can't complete it this way, they leave it. Everybody ultimately uses the Schweizer material. So we are also going to be basing all our classes on Schweizer. So if you are attending our classes or taking the D2H classes, you are doing these classes at home, you will have to purchase Schweizer material. Now Schweizer material, I do not provide it separately. You have to purchase the Schweizer material and you'll have to purchase the calculator. Rest everything is my headache, you don't have to worry. Because Schweizer is not something that I publish, I just use it. My lectures are based on Schweizer. So if you have Schweizer, you'll be able to follow the lectures better, because I'll be teaching you from that. So Schweizer material you'll have to purchase. Calculator is a financial calculator. There are 2 versions, Texas Instrument BA2 Plus and Texas Instrument BA2 Plus Professional. We'll get you the comments, the names and all. So TI BA2 Plus, Texas Instrument BA2 Plus is going to be for 2,500. This is a plastic body version, and 3,500 would be costing you the Texas Instrument BA2 Plus Professional version. 90% of the students I see are using the plastic version, and absolutely there is no problem. The same buttons are there, maybe 1 or 2 functionalities here and there, but it doesn't matter. They're not, that you cannot manage without. So I have seen people spending 2,500 and purchasing the calculator. You can purchase it from Flipkart, Amazon or any of the websites if it's cheaper. And the Schweizer books also, what I'll do is I'll connect you with the bookseller and you can directly buy from him at a very, very reasonable amount, exceptionally reasonable amount. So I'll connect you with the bookseller for this, so you don't have to worry. But calculator and Schweizer material, you'll have to purchase it separately. Other than that, all the practice material, whatever is to be given, is going to be taken care of by me. You don't have to bother about it. You don't have to bother about it at all. So institute material, you will not order the hard copy. Because we are going to study using Schweizer material, but for the practice you will not use Schweizer. Schweizer practice is very bad, very low standard, very, very irritating. It does not work. So we are going to study from Schweizer. Now when you're looking at your curriculum is very well defined. You have 4 subjects, you have certain chapters inside it. Every chapter's subheading is also defined. It is known as learning outcome. So every single subheading is defined. So whatever is the subheadings or LOSs, we call it learning outcomes. So whatever is the chapters and the subheadings of the chapter, that's same in the institute material, and it is exactly the same in the Schweizer material. Whatever extra I'm going to be giving it to you in the classes, either it will be in the form of handouts or it will be in the form of dictations. You will have to take that and you'll have to do that extra because you're not preparing from institute material. You're using Schweizer, and everybody all across India uses Schweizer for CFA or FRM. So you don't have to worry about it. So what I am telling you, do exactly that and it will be absolutely perfect. And the practice part, I will tell you separately exactly what to do, because the standard of questions in Schweizer is very poor. So we will give you the practice material. For the live students, you might get it in hard copy. For the video students, since the practice material is bulky, we give it to you in the soft copy form. And in case you want, we'll connect you with the bookseller and he will give you a printed copy of that. He can home deliver that. So we will do the practice material. For practice material, we advise you to do Bionic Turtle. So anyways, we'll give you the details of the practice. Once you enroll, you'll have the details and you'll have all the practice material details and all given. But that is what you need to practice. So now moving on to the next part. Now you will be getting an order of study. You will be told exactly in which order you are supposed to be preparing, how the live classes are going to proceed and how the video students are supposed to be preparing. Because topics are interrelated, you're expected to please strictly follow the order of study. So it's very logically and very thought out way it has been made. The second one, you will be given a performance tracker. Performance tracker would be like a PDF. It will be a hard copy given to you. In that, every single chapter name is given over here. So you need to keep on ticking that this chapter you watched the class or attended the class, live or video. You've studied at home. Just doing the classes will not work. Once you attend the class, you're supposed to be studying after that on whatever has been taught. Then the practice part, it will be all color coded. There could be some readings where I will tell you it will be dark gray, light gray and white. So you might skip out the white portion. The light gray and dark gray will tell you how important or less important it is. So exactly for every single reading, you will get the tracker. So you know exactly how much to practice for which chapters, because it has been very thought out and it has been made for you. There is also an Excel performance tracker you'll get in the Excel format. You can just put in the date of the exam, the number of days you want for revision, and when you are starting off to study. So it will tell you exactly the number of readings and number of hours to study every week. So you will get that. So you just need to put in a few details. Now say for example, I've completed those 7-8 chapters. So in the Excel file, you will just tick those 7-8 readings and it will update and tell you exactly how many readings for the remaining weeks you're supposed to do. So all that will be taken care of. On a very simple thumb rule, because this is one question that I get very often. So you will have approximately 160 hours of classes, regular classes. After the classes are done, there are about 20 to 25 hours worth of revision lectures that you have. In those 160 hours of classes, every single chapter, every single LOS is covered. So your material will be 100% covered, not even 99.9. 100% material will be covered. The practice, of course, you will have to do. I'll tell you exactly how to go about the doubts and all, because we cannot do like a class 2, class 3 that you're practicing all questions in class. But a decent, every formula, almost 70%, 80%, whichever formula is possible to prove, we'll prove it in the class. We will discuss all the examples. So we will not do 20 questions, but we'll do all types of categories of questions so that you can practice on that basis later on. So you'll have all the fundamentals, all the concepts done. So this is going to be your duration. Now how do you go ahead with it? Now suppose I'll have an exam on the May 20th or the November 20th. I'll keep that month vacant for revision. So I'll have January, February, March and April to study, 4 months suppose. I'm starting from January. So 160 hours divided by 4 months, 4 months would be 16 weeks. So per week I need to cover 10 hours worth of classes and I need to complete my upgrading the study part also of that amount of classes. That is a very simple thumb rule to do. Or let's say I have 70 readings and 16 weeks. So 70 divided by 16, it will tell me the number of readings, about 4.5 readings or so I need to cover every week. So instead of talking about number of hours you need to study, approximately 160 plus another 200 to study the same thing. So that is the number of hours. For working professionals, I'll keep on giving you tricks and all how you need to do. Like let's say Monday to Friday morning, I'll do the classes before office because you're always more energetic in the morning. Nobody's a night person. And then on Saturday, Sunday, I'll just do my reading and practice a little bit. So 10 hours of classes on Monday to Friday, 2 hours a day in the morning, and then Saturday, Sunday I study. You'll have to put in that effort and study extra. You have to compromise on that family time also. You want to do something, you want to get something, you'll have to pay for it. And it's worth it. It's very important that you're doing these things. So we'll tell you exactly in what order to study and all that. So performance tracker, you'll have a PDF which is color coded and you'll also have an Excel session. We will have a few videos, so live students will be attending with me. Like today, right now is the introduction class that is happening. And you understand that this is not a demo class or something. You need this information in order to actually start off with the curriculum. You need to have a holistic idea of what you're actually studying before you start and how you're supposed to be preparing. So this is your introduction class. You have a calculator session uploaded online on YouTube. So how exactly to use the calculator. People find it very irritating to use the calculator. They want to use the normal ones or the scientific ones. That is because we are not in the habit of using financial calculator. Financial calculator is amazing. You don't have an option. You're going to use it for both the levels. So might as well get habituated to it. And once you're habituated, you will not touch your scientific calculator again. I can't use a scientific now because I'm habituated to using financial. So it's just about changing habits and nothing else. right? So calculator videos on YouTube, you'll also get access to that. Then how to exactly study, prepare notes and practice and all of that. So we'll have another 15-20 minute session on that. 20 days before the exam, I'll tell you how exactly to revise. And 10 days before the exam, you will need to do how to attempt your paper. All the tricks and all to attempt the paper is going to be over here. For the video students, you will have all these videos given in a separate folder called other videos. You will have another folder with revision videos and you will have all the revision lectures. For the live students, you're going to be doing it with me over here in the live classes. So revision video students will have other videos, all these videos over here from the day one. They'll have revision lectures in one folder and they will have folder number 1 to 69, which is basically chapter number 1 to 69, the regular classes. So they'll have all the regular classes. All the notes will be either provided to you in the class or the video students will be, you'll have all the couriered notes and everything with you. So that is this part. Then hours to prepare. With the job, it is manageable. So even if someone is starting off in the month of January or February, it's not going to be a problem as such. Because even if you're starting in January, February, of course, you'll have more time crunch. You'll have to divide, let's say, 12 weeks with 160 hours and then manage it. There are people who start off late and manage, but of course, if you're planning to do it, you start off early. Don't waste too much of time in deciding and all. Start early, start doing it because you'll have more time to practice. So there will be a higher probability of you to clear. FRM exam difficulty level is high. We are not doing Schweizer questions. I'm telling you again. I'll give you exactly in the how to practice video. I'll tell you what to practice and where to practice, and everything will be written, given to you, communicated. You have to be, now especially the video students, you have to be a little attentive with all the instructions that are given. You need to read those. You need to listen to those. Now and I'm very involved with respect to your doubts. The live class students can ask me doubts after the class. Of course, if I have another class afterwards, you cannot, but mostly once a week at least, you'll see that after one of your classes, I don't have another class. So you can ask your doubts after the class. Otherwise, you'll have your regular doubt sessions. You can come in that part and ask. And you will all be a part of WhatsApp group, your live students and the video students. So video students, there are multiple WhatsApp groups because when we put 100, 200 people in one group, it becomes a lot of commotion. So we divide it into group A, B, C and all. Groups are only for academic doubts. Don't post anything else. If you have any other question, any query, you will always WhatsApp this number and you will get it sorted. So please don't ask class timings and this notes I did not receive, my video is not working, or whatever issue it is, you WhatsApp here. Don't disturb everybody in the group. Please try to adjust. Because everybody else is getting bothered by a problem. So 98311 49876. So you can just WhatsApp on this number, call on this number, your doubt is resolved. If within a day or two your doubt is not taken care of, this is my personal number, you can drop me a WhatsApp. This works only for WhatsApp. You can just drop me a WhatsApp in case there is any issue. If it is not resolved, don't WhatsApp her and within 20 minutes if you don't get a reply, don't do that. Because she's all the information, right? So it doesn't make sense for it, it just hampers the productivity. She's got all the information. So if within a day or two your work is not resolved, or any issue is not resolved, you immediately WhatsApp me over here and I'll take care of it personally. And I'll be a part of all the WhatsApp groups. So for the academic doubts, video students, you are in your group, we'll keep on commenting that you can call between this hour and this hour and you can get your doubts sorted and you can call up and get your doubts sorted. So that will not be an issue. Right? And try to post your academic doubts in the group. Only academic doubts, only subject related doubts in the group, so that if you guys are solving each other's doubts, of course it gets easier for me as well, and also you get to learn better because anyways you all are studying the same thing. And we'll help you form study groups and all also. So prices, institute material, hard copy, I've discussed all this. Calculator. Exam time management is going to be a little bit of an issue, so you have to be very, very thorough with the content. The questions are not going to be, all questions will not be numerical. There is a good chunk of questions which are non-numerical. They could be theoretical and conceptual. They will never be direct. So you have to be very thorough with the concepts. If you're mugging up, it will not help. You might want to know whether there are out of syllabus questions or anything as such. Generally, we don't find any out of syllabus questions as such. So there aren't any out of syllabus as such, but there could be different difficult questions and it's a professional exam. So out of 100, you might have 2-3 questions which is a little offbeat and you're not being able to relate. That's fine. So you'll have to be okay with it. So how are you supposed to study? You're supposed to attend or watch the class. If you're a video student, you're supposed to go through the class, then you're supposed to go through the Schweizer material. You're supposed to, you know, keep on underlining, making short notes and all. I'll do that when I do this part, how to study and how to practice, how to study and practice. I'll do exactly how you're supposed to make your notes and all that. I know exactly how you go about it so that, you know, it's easier for the exam day. Mind maps will be given, so there are summary notes and all those things, so that it's very easy for you to revise in a few days in the exam time. You're not supposed to do all the, I'll tell you exactly how to practice. Please make sure you're doing that. So now there are people who start off a little late. So in that case, they'll be able to do less amount of practice now, and they'll have to bank on being able to practice along with revision. And there is no hard and fast rule that if you study for 6 months, you'll pass. If you study for 2 months, you'll not pass. People pass by studying 2 months also. People may not pass by studying 6 months also. You need to put in your best effort. Just don't bother about anything else. And the earlier you start, the more time you have, the better, the understanding and all. So I'll tell you the practice level and all. Exam difficulty level is high. There are a lot of theoretical, non-numerical questions also. Practice will be taken care of separately and everything will be provided from our end. You don't have to worry. And I have covered almost everything here. Don't get distracted, because now what happens is, if you try to see, there are unlimited resources online. So if you try to do so many of things all elsewhere, it becomes very, very distracting. There are unlimited resources. There is an app to do practice. There is this and that. So don't bother so much. What I'll tell you is exactly 100% working formula. We have a good pass rate going on. Almost 80-90% people have been passing over the years. So make sure that exactly what has been told is done, and in that order. If you have completed everything that I have told you, then ping me separately and then I'll tell you what more to do. And you will not be able to do more than what I've already given, because I've already given a priority order. I've already given you the order in which you should study and practice. So you will not have time to do everything. So instead of trying to do everything randomly, you should do it in a methodological manner. So we'll tell you exactly what to do. So don't bother about it, because we need to focus on the kind of questions that generally are going to turn up in the exam. Then live students, you can always attend a few classes and then enroll. For the video students, there are a first few classes, first 2-3 lectures for almost every subject. CFA, FRM, any level is uploaded online. You can watch those and then enroll. So that option is there. In case of any backup related issues for live classes backup will be played. In case you have to go off for a month or two or something, we provide you the classes. You can take it back home as well. So the flexibility is going to be there. It will not be a problem. And for the video students, you get to watch one video 7 times. So the views are 7. So you will not have an issue. You will never watch the class more than once. It's just that in case it shuts down or you want to watch half the class now, half the class later, so all those are there. The videos run only on a Windows laptop or a Windows PC, and if you're running a MacBook, there are a good number of students doing that, but then you have to run a parallel Windows, and then you're able to run the classes, because the classes are encrypted on a Windows platform. MacBook, it does not work. So on MacBook it will work, but you have to run parallel Windows on the MacBook. It is very easy. A good number of students do that. So that is that. And we will be launching our classes on tablet and phones also. That will happen by December 2017. So anyways, you'll have the access on tablet also. It is coming very soon, not yet launched. And doubt sessions will be taken care of. Revision lectures will be provided. So video students will get the regular classes, the other videos, the revision videos, and all the notes in one go itself. And you'll be a part of WhatsApp group, I've already told you. Try not to defer. In case you have to defer your exam, you have to pay another $100 within a certain time period, like April 15th or something. You can defer within April 15th if you have a May exam. But you'll have to pay $100, and your work will always get more busier. You'll get always busier. You'll never get, your work life is never going to get easier. So try not to defer and push yourself and just do it. Then, just a moment. Exam deferral I've told you, and try to work on an overall development, because just with the degree will also not help. Beat any degree. Beat an MBA, beat a CFA, beat an FRM, start reading. It's very important. Start reading a few business books. In between also, I keep on posting on Facebook page, and I keep on WhatsApping you some very good articles. I'll read 20-30 articles. If I find something very nice, then I'll send you. So I don't send any random stuff. I'll send you very less amount of articles, but very good ones. Start watching TED videos. Excel skills needs to be improved, and so start working on a lot of things together, because it's going to be very much needed. Another question I get is with respect to the work experience and all. So you don't have to worry about it. Even if you don't have work experience right now, you can gather it after you're done with your exam and all. And it need not be that you have to work as a risk manager only. Any profession wherein it is related to derivatives, risk management, wherein you're managing risk, finance related and all, you have to put in details with respect to the wording. So you have to 60 words or 100 words, you have to describe how your profession is related to risk management, and that will qualify for your experience. And even if you're getting the experience after completing part 2, or you had a year gap in between part 1 and part 2, that will not be an issue, it's fine. And the kind of experience, people get very finicky about it, so you don't have to worry about it. Even if you don't have experience and you've completed part 1 and part 2 of the FRM exam, in your resume you can write part 2 completed, right? So and the membership comes after that. So this is more or less, and we try to complete the syllabus at least a month before the exam so that you have sufficient time to revise. With respect to mock tests, we kind of try to have 2 mock tests over here, 1 or 2 mock tests in the live class, and for the video students, you're supposed to be attempting the mock test at your home. We keep on putting you voice notes. I keep on doing that, 20 days before the exam, 5 days before the exam, 2 days before the exam, 1 day before the exam, on the exam day. So I keep on putting a lot of voice notes and comments and all. So please make sure you're reading all those instructions carefully and not ignoring those. And the live students will also get the same. So please follow those. And the video students can give the mock test at their places. Generally, the GAP is going to be giving out a mock paper. They give out a mock paper just before the exam date, and we recommend you to do that mock paper in the exam environment. So that's very much recommended. For both part 1 and part 2, we do that. So you should be giving that FRM GAP paper in an exam environment. And other than that, tell me if you have any questions. I think I'm more or less done with all the information that I was supposed to provide. Is there anything that I've skipped out? Any questions that you all have from your side? And video students might have other questions or other concerns and all. You can always WhatsApp over here, call her up, and you can always WhatsApp her, and she will give you all the details that is needed. She has all the required details. You just need to pay the money online. Your classes get couriered to your place, and you start watching. And every single instruction, like you're seeing over here, single thing is absolutely taken care of very well. So you will not have any problem. Tell me any questions. Nothing?
After 2 years, the certificate
the certificate will be sent to you by the institute after both your parts are over and you have given the experience. But even if you've completed part 2 and you have not submitted your experience details, you will get the printout. You can print out your exam score, and on your resume you write that I've completed part 2. So the moment your 2-year experience is completed, you fill up the details on the institute website and they send in the certificate to you. The registration will be online. You don't have to ever courier any exam, and the exams take place all over the world.
So getting the FRM designation for the work ex, you said how you relate that with the evidence management. So what do we need to do? So suppose we have cleared our level 2.
So once your level 2 is clear, you will definitely be working somewhere or the other. It could be a teaching profession. This is also risk management related. It could be in a budgeting profile wherein you're looking at the risk of raw material increasing, decreasing. It could be in a customer management profile wherein you would be looking at operational risk maybe. So it could be related to risk management in any area. It could be your own personal business, and that could be related to risk management. So you'll have to define as to how your role is related to risk management and fill that up, and they will approve. There is no governing. The GAP Institute, the GAP is going to be taking care of that. So they will provide an approval to your work experience. But it's more about how you explain that how your job is related to risk management. So you don't have to worry that only this profile will qualify, this profile will not qualify. Experience is not something you should be bothered about. Your deciding factor to do or not to do an FRM should be based on the curriculum, whether you are finding the content interesting or not interesting.
Is there any time limit for obtaining the experience?
The time limit for experience is there, but it's sufficient. Like I think it's 4 years after your graduation. You have to just check that after your part 2. So it's going to be sufficient because nobody is going to sit back.
After obtaining the experience, the membership will be given.
The membership will be given and the certificate will be given. That's all. But even after completing part 2, you write on your resume that part 2 is done.
One thing, suppose if someone does pass these levels, but don't take the membership, can he take membership later?
He can. So if someone suppose has passed right now, you have to fill in your work experience requirement within a time frame. Later on, if you don't want to pay the membership fees and after a few years you want to pay the membership fees, you can do that. That will not be a problem. But within a designated time frame, you will need to submit your work experience requirements. But that is a sufficient amount of time, so you won't have to worry. So right now the question membership we'll cover after level 2, after part 2. Right now your concern should be the curriculum. And the earlier you start, the better. Don't be very indecisive and kare, nahi kare, should I do, should I not? And don't waste time in prolonging that decision. You need to take a call, stick to it and work your way towards it.
So for the live students, if someone is missing a class, so can we...
Backups, I will discuss it with you separately. But immense amount of backups and all is there. If someone discontinues the live classes and relocates to another city or something, the remaining classes you will get it on your hard drive and you can go. So we will not charge for that also. Even the video students, say for example, in case you did not clear the exam or deferred the exam, you give us the mail of the institute of deferral or not clearing, we will extend your validity for the next term and we don't charge for the same as well. So all those issues don't have to worry about. Video students can go through FAQ and talk to her. And otherwise also it will not be, those issues will not be a problem. Even if those issues, the number of views is there only to control any kind of misuse. Even if that needs you need to add a few views or something, we do that. We don't have a problem with that. It is just to prevent any kind of misuse. And the videos will run only on one laptop. So you cannot have videos running on one today, tomorrow another one and third day on another one. Of course we have to prevent misuse. But then again, if your laptop is not working and you are buying a new one, you just WhatsApp her, she'll take care of it and it will start running on the new one and the old one will get exhausted. So you'll not be able to run on the old one. So those things we take care of. All good till here? So this is more or less all about your FRM Level 1 curriculum. I hope you guys are sorted with all the answers that you're looking for. And thank you.
Excuse me.